And we're live.
Thank you very much indeed. Welcome to this meeting of the Finance Panel. And we look forward to having lots of meetings of the Budget Panel early next year. So I hope that some of what we have today will be covered in more detail next month. I think that will be true. First of all, any apologies for absence?
None received.
None received. But we are, thanks to Councillor Chris Jarvis's presence, we are quorate, a magic number of 2. So that's great. So let's begin. I'm just trying to find the agenda, which of course I won't find, but let's begin then. Oh, any declarations of interest? No, Chris, I don't have either. So let's proceed to the work plan. Do you have any comments on that, which is agenda item 3? Basically, it only goes to a meeting after we've had all of the budget panels. So I suspect we'll be zonked out. We are going to get information on the car parks and park and ride scheme then, which we are looking forward to. So, okay, let's note that. Thank you very much. Approve it. And proceed then to agenda item 4, which is the minutes of the last meeting. Do you have any questions or comments, Chris?
No, nothing for me.
Nothing for you. I had just one, which is more a question of what, sorry, I'm looking at the papers, what is to follow. We're getting the car park one coming up in late January. The head of corporate property will brief the panel on corporate debts, it said, before the work of the budget review group begins. I don't know quite where we stand on that. Maybe I can ask Nigel Kennedy. Do you know where we stand?
Yeah, I mean, I just wonder whether that's commercial debt, James. So it's, I think last time we spoke, is that in respect to our commercial rental?
I think that probably is true, yes.
Yeah, we have about £4.5–5 million still of bad debt provision actually still there. And I know it's still tough times. So it'll be someone like Jane Winfield or Emma Gubbins come in to brief us on how they're getting on, basically, I think, with pursuing not only the current debt, but also the arrears, which were significant, basically, over the COVID period.
It did say before the budget review begins, but do I take it that this is, will we cover it in the budget review, or will it have to be taken after it?
We can cover some of it in the budget review, because obviously, if you look to the budget papers, there's quite significant increases in rental, basically. So we could pick it up in Jane Winfield's session when she comes to the panel, if that's your preference.
I think that's certainly what. I was just going to say that's, I think, what Jane's anticipating.
Yeah.
Okay. I just wanted to know, because it does say in the minutes we would have had it before then. But that's fine. I mean, maybe what I could ask is if she has a paper which may well be confidential, I think it might be helpful to circulate it, because I'm sure that Chris, like myself, and the others, I imagine, would be interested, since it's a fairly chunky item, and just to be realistic about where we stand now and what it's likely to mean maybe going forward. So if she could, because she'll need to get it ready before the meeting, so that would be helpful. It's just a request, really. Is that okay? Thanks. Mm-hmm. So with that, we'll approve the minutes. Yeah, I take it as consent from Chris. So let's go on to the next item, which is the integrated performance report. Now, I have read this. Have you had a chance to go through it, Chris?
I have, yeah.
Okay, so maybe we don't really need a summary of it. I've got a series of questions, but first maybe we should go through in order. So, Chris, I'll let you speak before me. I suppose I've highlighted particular items, which is the easiest way to do it. Is that okay with you, Chris? So let's go. I'm doing
You put yourself on mute.
James.
I mustn't touch my keyboard. Sorry. I was going to say I've got a paper copy, but maybe I could indicate paragraphs because for me, the second page, which is page 18, has in the middle financial position, general fund revenue. Do you have anything on that, Chris?
I do, yeah. I guess just it's in relation to, I guess, paragraph 5, the second bullet point on community services, and this question around the management fee. And the paper obviously says that the assumption is that the leisure management fee will be paid in full this year. And I guess I just wanted to query how confident we are of that, given that later, I think on page 25, the leisure contract is still listed as a red risk on the corporate risk register, and those two things seem potentially incongruous if we're assuming there will be the full management fee, and yet we think that there's a red risk around that. Yeah.
Who would like to? You do the risks, don't you, Anna?
I don't actually. That is Bill, but I don't know if Nigel wants to capture all of it.
Yeah. In terms of the management fee, I mean, I think we're fairly confident on the management fee at the moment. We are billing on a monthly basis, and we've agreed that with the current incumbent. Actually, we are actually receiving that. I think we remain slightly sceptical, and hence why the wording is as it is, basically because in some of the areas on utilities where the current incumbent is required to pay us utility bills, the increases are proving difficult to secure the income from them, actually. So whilst they're paying on some areas, basically they're not paying on others, and that's why degree of skepticism. In terms of the overall risks in the contract, there are some areas which are constantly actually raised around risk, and that's with regard to the operation of the leisure centres and in terms of the numbers of staffing, etc. Yeah. I know the operator has difficulties in recruiting to some of the vacant posts, and I think that's more why the risk is shown as it is. Basically, that is constantly raised with client officers. Actually, it is for the incumbent to sort out, but it is nevertheless a risk on running those operations. So quietly confident in terms of the income, but you're right to raise it in terms of the operational side. It is still a bit of an issue as well.
Okay, thanks. Any others under paragraph 5? I had a couple. These are actually, I suppose, for you, Nigel. It's called financial services. One, and I know you've explained before, but I still don't remember why we are not complying with PCIDSS. I'll just mention the other one while I'm on that paragraph. You've got court cost income has an adverse variance, but on the other hand, we've got successful arrears recovery. So I just put, do those two things balance out? That was my question. So it's one about the PCIDSS and then about the balancing of the two items.
Yeah, in terms of the two items, they do, well, I don't know, balance out to the penny, but they are compensating items, actually. In terms of the court cost income, we put a target in, or an amount of income that we believe we are going to recover in court costs that we charge to council taxpayers and business rate payers, actually. Having said that, we take proactive action, basically, when we issue the summons list, to speak to people and say, you don't really want to go to court and you don't really want to incur those court costs. So why don't you pay the money that's outstanding, basically, and we will call it quits. We will cancel the summons and job done. And so it's a bit of a victim of our own success, really, that the more that we can get to do that, which from a customer point of view is better customer service, the lower our court cost income is, because they don't go to court, actually. So that's that particular one. In terms of PCI DSS compliance, there's quite a detailed technicalities of why we don't comply, but it's all to do with the way that we take electronic payments in terms of card payments over the phone and in person. We have done a lot of work recently in changing our income accounting system, actually, which actually drives some of that behavior. Unfortunately, at the moment, until we can get additional telephony installed, we cannot complete all of the work we need to do around compliance. The council, you might have heard before that I mentioned about the telephony contract, and the council have recently placed a contract to renew all our telephony in terms of mobile handsets, but all our telephony in terms of what's going into the contact center and the like. And that will basically put us in a better position in order to get compliance. It's not something that's just new to Oxford City Council. A lot of authorities have to go through this. I mean, we have to go through a self-assessment on this, which is many hundreds of pages, basically, of questions to answer. Unfortunately, we just can't get this one over the line. What it means is that for the time being, we will be hit with those increased charges because we are non-compliant. But I would hope that between now, certainly the end of March, when the new telephony is due to be implemented, is that will go away, basically. So for the next financial year, you won't see those costs as being so prevalent.
No, I somewhat understand, but you know, for 200,000 a year, it does sound quite a chunky item. Maybe there could be some words somewhere, just, you know, it doesn't have to be long, but to explain that with the new telephony contract, we anticipate that this will not be an issue next financial year. Something like that. Okay, thank you. Paragraph 6, Chris. No. I had, again, it's a bit like my point about offsetting. I mean, on the one hand, if HRA borrows less, we get less interest from them. But on the other hand, we get more interest elsewhere. I mean, is that, broadly speaking, fair? I mean, it's always ironic that if we don't achieve our capital budget, or HRA doesn't, on the whole, it seems to be presented as a good thing in some respects. But in this particular respect, since it's one arm and the other arm, and it'd be the same for OX Place, you know, it's taking with one and losing with the other. Is that fair comment?
Yeah, I think it's fair to say it's all interactive. As you say, a slippage on the programme, if that's in housing, basically, then there's less borrowing by the housing revenue account. And obviously, we charge less interest because they're not borrowing as much. That's an adverse variance in the revenue account, but it's a favourable variance in the capital programme. So it is a bit of an in and out, basically, in that sense, actually. You're right to raise that, actually.
Thanks. Okay, hello, Amir. We've gone ahead because Chris and I are keen to get on with this quickly. We are, just so that you know, in agenda, we've done the more formal stuff. We're in agenda item 5, I think it is. Yes, I've turned over the corner of the page. And we've just covered up to paragraph 6. I don't know if you had anything specific in the first paragraphs.
No, I didn't. My apologies. I got held up at work, but no, I didn't have anything to.
No, thanks very much. So what we're doing is gradually going through this agenda item, and I think we've agreed that the detailed things which will come up in the budget panel, we may not go into details today. So let's go on. We've got paragraph 7, contingencies, paragraph 8, efficiencies. Any comments from Chris or from you?
Just a quick one, really, on the utility cost pressures. Obviously, in the paper, it's described as a best estimate. I guess it would be useful to get an understanding of what the process is for making those estimates, not only for now, but in the future, because that is obviously going to be a major issue going forward, and has been this year. So any clarity you can provide on terms of what that modelling looks like and how you do that estimating and how robust we think that figure is would be helpful.
And could I just, in that context, we've got the council companies. which are independent to some extent, but they face the same cost pressures. So maybe you could factor that in as well.
Yeah, I suppose just to pick up what you were discussing earlier about someone coming and briefing you on energy, and that will be Paul Spencer in all reality. And I think you could probably pick that up there. I mean, we go through quite well as forensically as we can. Yeah, we look at all our buildings basically that we own, and indeed those in the company as well. Obviously the depots, etc. So we pick up all the charges. Some of the costs are fixed or relatively fixed in the short term. Others are subject to the sort of vagaries of increases. And obviously at the moment it's a bit difficult to tell what the government are going to do. At the moment we get like domestic ratepayers get the cap, but from March next year we don't know what's going to happen basically. I think this, I'm right in saying, Anna, this probably plans on the basis that we don't get any further government support actually from next March, but who knows at the end of the day.
My understanding is that we've missed out on the cap of getting any support. So yeah, no, we're not going to be getting any government support for it. I don't know whether that's down to size of organisation or value of cost, but we've missed out. I think it's also useful to say that that was a estimate at a point in time, and we've had several iterations of that, as you can imagine, as well. And we've currently just received some more data from our energy providers, so we're working that through at the moment. So we will have more updated estimates.
I mean, one thing I could maybe add, I mean, I have to follow this. I'm about to write something for my day job which is more about natural gas and oil, but not about electricity. But if you look at the forward prices, what's being done with Russia and the general world recession does seem to imply that the gas price in the free market is coming down, and all the LNG coming into the country is part of the process of moderating it. I don't know, you're right, Anna, it's always a point of time, but it might be, if challenged, it might be useful at some point just to look at the forward prices, which you can get, and then use them as a basis for next year. Mm-hmm. That's just a suggestion. Yeah. You know, at least you can then justify it and answer questions.
Yeah.
Okay. On efficiencies, any questions, comments? And the one thing I was going to say, which is actually quite encouraging, is if you look, the more sizable items with 3 digits and thousands, all are wise, and the ends are against the rather smaller items. So I suppose the relevant officers should be praised for making that possible. Mm-hmm. I mean, that's quite a challenge. Okay. Then let's go on. I'm turning over my page. Housing, HRA, paragraphs 9 and 10. Any questions? Okay. Well, I had one, because it happens that when I go every morning to the ferry pool, one of the people, there are only about 1 or 2 people who are in the same changing room I am, and he's quite senior in ODS, it turns out. And so I asked him, and he's in charge, I believe, of things like quick response, minor repairs for council and university. University apparently has a big contract with them. And I just wonder how we've got this general minor works, 1.25 million. And I just wondered what this was. It sounds quite, you know, in the scheme of things, it's quite a lumpy item. Do you know why it's so big?
It's so under the banner of general minor works is all the responsive repairs to all tenants, also all council houses. So I guess it could vary from you know, a leaky roof, a tap needs replacing, through to something more substantial, like, you know, I need a new bath because it's broken or something like that. Those sort of things that are classed as minor works, that the council wouldn't see every single job to ODS get the calls. The calls go through the contact centre and they go directly to ODS and they respond on our behalf. So it's a large budget in each year, and obviously the call on that has been quite significant already this year.
I mean, it's not because of QL arrears or anything, just
No.
seems quite a big item to hit us.
Yeah, so that's it. QL has got nothing to do with the projected overspend on this budget at the moment, because we've accounted for all of the old year stuff in the old year. So this is only new year items. So yes, it's.
Do you know what I mean, is this a sizable percentage of the budget for this item?
I don't know what the budget is in total, actually.
Okay, maybe you could, we don't need to discuss it now, but
Yeah.
I'll be interested just because it does seem, seeing a figure of over $1 million, where it sounds as if it's something that might be under control. It sounds rather large, that was all.
Yeah.
Okay, thank you. And then we come on to capital, which is paragraphs 11 and 12. Any questions on that? I mean, there's always a question, I guess I will ask it again now. I mean, why is there always such overestimate of what we're going to spend? We have a PMO system, we have, I don't know how many project management officers now. I remember them being recruited and installed. And I thought we now had a system for getting this right. And I note when we come up to budget bids, there is a bid for lots more. I can't remember quite how they're described, but regeneration or something officers as well. Can someone explain how this is consistently so wrong?
I cut out there, James, but I think I've got the general tenor basically of.
Well, we saw a dog briefly.
Slippages, I'd imagine, basically is the issue. I mean, if again, you probably heard me say this before, but if we talk about development, and in particular in terms of the housing company, which seems to be where some of the major slippages are, basically, if you speak to the likes of Jane Winfield, who are probably more knowledgeable about these things than me, she will say this is development. And basically development slips basically quite significantly, and it's not untoward.
But why do we consistently put it in as if it doesn't slip? That's all.
Well, I think we can only, when we're putting the budget together, we can only go by what we're being told, and at a point in time, again, we are told we are going to spend X, Y, and Z. So all of our figures, in case of the company, all of our borrowing, all of our projections around interest, they're all based on what the information we are being given. But it doesn't take long before you get into the financial year, and indeed it's shown up here as Q1, where you've got nearly 27 million quid with the slippage. Actually, I'm probably not the best person to answer the question, if I'm being honest, basically. But
I looked later in the papers, when you look at the detail, I discovered that it's less than 20%, I believe, of the capital budget, and I think I'm talking separately, HRA and General Fund, has been spent in the first half of the year. You have to go hammer and tongs to get to 100%. Now, things may be weighted towards the second. I mean, I would just recommend, if that doesn't sound nonsense, since the slippage is consistently about a quarter of the total, why didn't you shove everything back 3 months?
The only caveat I would say to the statement that you made about spend is that we are still suffering from the impact, or certainly in Q1, we were suffering from the impact of QL. So that spend will absolutely be less than it really is. It's just.
But this was Q1 and Q2.
Yes, but I think it's fair to say we're only just catching that back up again. So I think some of it will be. I'm not saying you're not going to have more slippage, or because I suspect that you will. What I am saying, it's difficult to compare the spend against the budget because QL has not caught up at this point in time.
No, but you already have slippage built in. Bill, what do you think?
I was just going to comment that from the Treasury perspective, when we've been looking at sort of bank balances, etc., and I have asked Oxford Direct Services about it, that the actual billing from QL for the 22-23 year didn't happen until probably after this point in time. So you're likely to see that coming through in Q3. But that's just from what I've observed and challenged on from the.
But you still have slippage. The slippage is still equivalent to about a quarter of the initial capital budget. That's all, which is why it does seem, well, I'm going to suggest it seems prudent to assume that there is slippage, and just that the timing, I mean, an easy way would be to assume that one quarter doesn't happen in this year. I mean, if next year they hit you with 200 million, I would make it 150. It sounds as if that's normally what happens. Is that unfair?
I think it's fair to say that is what normally happens. I think you could say that in the year that you take that view, and we base our estimates on a lower capital program, what will inevitably happen is they'll spend it. But we could take that view, but we basically take the view based on the information we are being given that they will spend basically. But perhaps I wouldn't necessarily disagree what you're saying.
Okay, I mean, maybe we should challenge Jane and the various people with this reality and say, can you please allow more realistically for what you know as experts are the causes of slippage?
Yeah.
I think it's difficult to put a blanket across and say,
I agree.
I think because if you look at some of the reasons for some of the large slippage in this last quarter, they're sort of quite specific to a project and for specific reasons. So yeah, taking your point, 35 million is a large amount to slip in a quarter, but there's some quite significant slippage there. But we do try and push project managers to give us their very best estimates of what they will spend.
Okay. Anyhow, I feel, I mean, this is every year I've been on this panel, I think for more than 10 years, this always happens. And I thought we'd come up with a system that was meant to be better. Anyhow, I've made my point. Let's go on to general fund.
I think Amar's got his hand up, James.
Yeah. Oh, sorry. Yes, I can't see. Yes, I'm here.
Sorry, actually, my question was answered in the answer to your question, so I'm happy to allow it.
Okay, no, thanks very much. Let's go to general fund, which is paragraphs 13, 14. Amir, do you have any questions?
I do, but I'm just looking for my battery charger to make sure I don't leave the meeting unexpectedly. So if you ask someone else, come back to me just for a moment.
Okay, I'll let Chris ask first. Okay, I had one I had more than one actually, but these aren't big deal. One, just to understand, there's an item which is 270,000 slippage, repairs to, it's Gloucester Street and George Street. I just wonder, are we doing this in anticipation of a tenant who's already signed up, or is this us investing in order to be more attractive to a tenant?
I don't know. Do you know?
Yeah, I think it's more the former. I think we've already got a tenant in our sites, basically. So, but it's something we can get back to you, James, and just
okay, fine.
I think it's the former.
So it is kind of invest to earn, if you like.
Yeah, no, I get that. Yeah.
Okay, yeah. Amir.
Yeah, sorry. My question was just around the bullet point on vehicles. That seemed like quite a significant slippage to me on vehicles. Do we know? I mean, I don't know whether that's the whole fleet or number of vehicles. I mean, that seemed like quite a significant spend just on vehicles.
Yeah. So just bearing in mind that our vehicles vary from a van, which might cost 10 to 15,000, through to a dust cart, which is 200,000. So I suspect there's a few dust carts due for replacement included in that value. But our programme is normally around £4 million a year we spend. So yes, whilst it is a significant amount, I suspect there's a few dust carts, but I can find out the detail for you if you would like.
Okay. I just had one other, which is maybe not necessary to deal with now, but in terms of Oseney Mead, which I know is a contentious topic, there's the routing of HIF funding from Pathworks to Bridge is currently assumed to help address the funding gap. I didn't understand at all what that meant, but maybe that's my lack of insight. I mean, maybe you don't need to answer. I suspect it's to do with juggling, sums from one account to another.
Yeah, it's basically just juggling funds. Actually, I mean, there was a shortfall, but in order to cover that shortfall, the Housing Infrastructure Fund, which is a government grant, is being moved into that area basically. So, yeah, that's.
It doesn't. Does it have other serious consequences anywhere or not really?
I don't think it does. No.
Okay. Fine. So then let's go on HRA, which is paragraphs 15 and 16. Any questions? Amir. You're muted at the moment.
So I was going to say, thank you, Chair. I was going to say I might change my background in a moment because I don't think it's obvious when I put my hand up. I was just going to say on the previous bullet point, if it hasn't already been mentioned, just to say well done and thank you to the officers for the Oxpens car park and bringing that in under significant budget. So well done.
Thank you. Chris.
Yeah, just on the HRA, just one question really around the slippage around fire doors. The only reason I raise it is just because that seems like a pretty serious area that to have slippage on, and I just wondered if we could get any clarity on what's going on there.
I'll certainly take that point and ask that question, Chris. I unfortunately don't know the details, I'm afraid.
I do believe there is work happening on it, but from my friend in the changing room, but I'm not sure how far advanced they are.
Yeah, I think there's a programme of work, as it says there. They've identified items in the fire risk assessment and they are programmed in, but it still is allowing a significant amount of slippage. So, but I will.
Okay, that would be good to clarify. Mm-hmm. Okay, shall we move on to corporate risk, which we always have? Any questions on our 5 risks, red risks? I always raise, and I will raise again, I still don't believe terrorism is a red risk, but since some group of you has decided it is, I think Bill always defends it, but I still find it, I don't feel that is, in terms of immediate pressing risks. The other ones are more structural in a way. Anyhow, that's just put it on record.
I'd concur with that, Chair. I think I raised that at the last audit and governance.
Yeah. It's a normal thing, but anyhow. So in terms of, I'm just trying to think, we are meant to get back with questions, comments for the cabinet. Is there anything here that needs to be flagged? I think most of this is clarification for us, really. Maybe we can note that we're impressed that in efficiencies, the larger items have been achieved. That is a good thing to note. And maybe we could note concern about the fire doors, given the prominence the topic has had. Is that fair? I can't think of anything else we've really raised. Mm-hmm. Okay. With that, thanks very much. Now, I'm going to suggest that I'm just looking. Then we've got, I'm trying to remind myself what it is. Treasury management, sorry, this is for Bill. Have we all, have we all managed to read through agenda item 6? I hope so. It's always very clear. Do we have, I have at least a couple of questions, but do any of the rest of you have any questions on this report? Chris.
Just a very quick one, and I suspect Bill will know exactly what I'm going to be asking, which is again on the money that was previously held in the Barclays Green bonds and whether there's been a replacement found for that yet since that money's been removed from those.
Yeah, sadly there hasn't at the moment. We're still looking for, well, we're always keen to make green investments because it's the sensible and ethical thing to do, but we haven't found anything that actually will fit in with our treasury strategy that is available out there.
Thanks. I think you do mention it somewhere in the text. Yes. Any other questions, or I will come to mine, which are, I mean, there's one which I suspect is just a typo, but I might as well get it. On paragraph 27, which is about Lothbury, you refer to quarterly returns in the range of 3 to 4%. I'm assuming that's annual, annualized returns. I mean, if it was 3 to 4%, everyone would be piling into it.
Yeah, it's on an annual basis.
Yeah, you should maybe just clarify that, because some people may not do that. The other thing which I wonder, which I think I know the answer, but I'm aware that the rules where you've got investments and they decline in value, there's about mark to market, and how you treat declines in value. And I just wonder, since they are currently turning down, and my guess is with higher interest rates, the values will fall further. Do we have to do anything in our accounts to reflect a decline in the asset value? I don't know how we treated it at the end of the previous year and how we treat it now, and how do we reflect that?
Okay, so in the accounts, we have to actually pass increases and decreases into the income and expenditure account.
That's what I thought, yes.
Yeah, at the moment, there's a statutory override, which takes that money back out again and puts it into a specific reserve, and a ring-fenced reserve that you can only use for that purpose. That statutory override may or may not continue. There's a consultation which we're waiting for the results of at the moment. But I think the important thing to note on this is that they're all treated the same. And so at the minute, on the latest valuations that we've got on these 4 funds, which some of them, we've got the latest at September, some of them at the end of November. But if I aggregate all of that together, you're still talking about 1.3 million higher. So if the statutory override actually went away, the effect would be that we would actually have a credit in the general fund of 1.3 million. But because we're not holding these for capital value until actually at some point we may well redeem them, but it'll be long term because these are long-term investments. Then what we would do is we would move that money again out of the general fund, but using a different mechanism by moving it into an earmarked reserve. So again, no effect on the bottom line.
Okay, no, I just wondered because I know about mark to market, but you're saying you've got a statutory override and you've got some credit in the meantime.
Indeed.
Okay. Any other questions, or may we note? I don't think there are any questions for Cabinet from this particular item, are there? So thanks very much, Bill. So we then, if I can suggest, let's go to the performance, scrutiny performance monitoring, where we did get, am I right, Richard? Did we get 2? There's one that had some papers at the back of the original papers for this panel, and then there was a supplement that was issued later. Is that correct?
Right.
Yeah. Thank you. So, have you both had a chance to look through this? And do you have any questions, comments, whatever?
I haven't seen the supplement. My apologies.
Well, you may have seen the earlier one, which is somewhat similar. The supplement actually adds October to November, so you've got to September. So you've got September near the back, and you've got October at the front. And it's, at least in my script, it's much bigger and easier to read. But that's as maybe. But it was at the end of the item 5, I think we had some sheets. Did you have any, Chris?
Yeah, I mean, just a quick one really on looking at FSC 019A and B, both the council tax and business rates collections being below the target, and I just wondered if we could get a bit more of a narrative on that.
Yeah, I mean, I can make sure the narrative's in there for next time, but I mean that they are tracking slightly below the targets. I suppose a number of reasons. One, over the COVID period, we've had a hell of a lot of work to do given to us by the government in terms of business grants, etc. So we've been paying out all the energy grants, basically, the retail hospitality relief, the car fund, and so on and so forth. And we've had to divert resources into those areas, basically. You might say, well, why didn't you get additional staff? You simply couldn't get additional staff, to put to help us out, basically. No authority, every authority was struggling, actually. I think another thing as well, over the COVID period, they suspended magistrate court hearings. We've only just got a court hearing. The first one for many months, basically, is on January the, let's say, 17th. And we are already at pre-summons and summons, basically. I think without that, unfortunately, it is what it is. It's very difficult without that ultimate stick, if you like, to try and collect the debt, actually. So it's tracking below where we would like it. But we hope that will pick up as we go through the year, as certainly as A, we're able to get more court hearings, and B, we'll have more resources available, basically, as the government grants sort of disappear off the radar.
Thank you. Any others, Chris? I mean, I was going to say, and it's still a very mixed sort of picture of what we're getting. I mean, in terms of format, some things like customer calls answered on the main telephone. This is CS 003, on the main telephone services without people hanging up. And we've got, I don't know, about 12 lines of text. I mean, I suspect that what would be ideal is to have fairly brief comment, and rather than, because what is even worse, and this was, I think, not in the version that we've got just now, but was in the original set of papers. Some of them are long narratives, but they're qualitative. They're not actually giving numbers. And I really don't know what we're meant to make of qualitative ones. I think one or maybe two of those are answers under Mish Tuller's control. And they give reasons for various things, but since it was all qualitative, I wasn't quite sure what we meant to make of it. The other thing is, some of it is clearly measures that are only available on an annual basis or on an occasional basis. There's one thing, I'm trying to remember what it was, that's 2 years out of date. And I just wonder whether we don't need to try and fine-tune what it is. I mean, we do care. For example, I have no idea, why is it we have nothing, the top item in this paper, in this agenda item, staff turnover, and there's nothing for October. No target, nothing. I mean, I'm not sure. Does that mean we don't have the data? They hadn't submitted it. I don't quite know by what process. Isn't this under Helen Bishop's control, this item? And it was actually, she's the officer who's called the owner for this. There's some things where they talk about being on target, and yet, as far as I can see, the only number they give is below target. You wonder, is this wishful thinking? Is there any reason for it? I don't know. When you try and look at it, it raises often as many questions as it claims to answer. And I honestly don't. Who trusts these things about physically active adults? The percentage, I don't trust it. I don't quite know where it comes from, but they religiously put it there. I mean, I'm just giving skepticism as an idea. I'm not, to be honest, when I look at this, some of these are actually quite useful, like percentage of rates, percentage of council tax collected. That's an important and tangible item, and it's given, and you've got answers for why it's lagging behind. Some of the other ones, you know, you just wonder, maybe we need to remove them from this. And there's one which I know Anna and you, but I think it's more Anna's in charge of previously, is about discretionary funding won by the council. I'm assuming these are bids that we submit for funding from central government. Is that fair? And I know that an awful lot of things do depend on central government funding. And I would be worried to see it now for quite a few of these performance monitoring reports. It has been zero. And I just wondered, is this because we are slipping? I have no idea what benchmark we should use, but one always hears of government funds being available. I don't know whether they're available for us. Is this some sign of falling short on our part?
I mean, an overall comment, James. An overall comment on everything that you said. I would tend to agree with you, and I think, Richard, I think we need to take this away, because I don't know where these comments come from, but I would totally agree with James. If I was a member looking at this, it's very poor and very lapsing in some areas in terms of commentary, you know, and data missing. I mean, the data that James has just mentioned in terms of turnover and sickness, it's all there. I mean, I see it all on a regular basis. So I'm not sure why it doesn't come in here. Yeah. And I think we really need to take this away, Richard, and improve on this and get officers to improve the commentary. That would be my overall comment.
I don't want a long commentary, actually.
No, I get that.
It can be punchy as well.
Yeah, it might be worth saying that the person who has been providing the reporting has changed job. So it is a new person who has provided it most recently. And I think the panel might have identified a couple of issues that would be remedied by training. But also in terms of specifics, if you don't want certain points reported on to the panel, please let me know afterwards, because I'm sure they'd be happy not to report on them if you don't want.
Well, what I'm not clear about, which is why it's very difficult to assess this, is are they pretty much useless at the moment because they're not being reported in a form that makes any sense because the data do not exist? Or is it just that they haven't got the data together? I mean, Nigel's given examples. The numbers are obviously somewhere in the system. And my hope would be, as long as, if it is Helen Bishop's got ultimate charge of this, she should be commanded to make sure that if it's a new officer or not, they know where to go, where to find it on the system. If it's in weekly reports, that's where it should come from. You know, it's just, it's neither fish nor fowl at the moment.
No.
I've made an action note to meet with Nigel and Helen.
Okay, I mean, I've made my point, but I feel it's not quite doing the job that we had hoped. And, you know, we don't want things just for the sake of it, but some of it is meant to be really quite good. And one of the things, actually, which is relevant to the point I think Chris made earlier about leisure and so on, we were at one time meant to be getting not monthly but quarterly data on how the various leisure centres were doing, you know, or in aggregate what revenues were coming, usage rates. And I know Fusion, and I suspect our leisure service, didn't want to pursue that, and it's just dropped off. But that's actually jolly important, especially if in the background this is something that the council may take control of. You know, we ought to know how it's doing. It's a big spending item. And it shouldn't just disappear.
Yeah, I mean, that's something, Richard, I think you could pick up with Lucy Cherry or Ian Brooke, I think.
Well, Lucy's just changed jobs. I don't know what she's doing now.
Okay.
I saw somewhere a message that she had moved.
Okay, I'm not aware, James.
I would always go between you and me to Hagham.
Okay, I'll leave that to Richard.
Okay, sorry about that, but honestly, this is not quite good enough, to be honest. Okay. So we come then to the agenda item 7, which we're obviously going to go into in detail when it comes to the budget. But I think it would be good if, have either of you had much chance to go through this? It's quite a big paper.
I haven't read it in its entirety, but I've read the
Okay.
executive summary areas.
Okay, because I mean, this is jolly important, and I've got most of the way through, but then I had the stuff. I had to go and start a fun run for the city and county employees, and had to judge the best Christmas costumes, which I did. Great fun. So I'm not sure the best way, because this is quite lengthy, but maybe you can make comments, and if they're general, so much the better. Chris, you put your hand up.
Yeah, it was more a suggestion as to next steps rather than individual comments now.
Yeah.
I just wonder if, I mean, last year I think we didn't spend a huge amount of time in this meeting going through these papers, and instead we, outside of the meeting, sent questions for the budget review process separately, and I wonder whether that's the best way of going about this. Maybe using last year's questions as a starting point, and for the panel members to feed in additional questions and suggest removal of any that we don't think are relevant anymore. Just A, in terms of the amount of time we've had to look over the papers thus far, and B, in terms of the best use of our time this evening.
I think that's an excellent suggestion, because I have points which I will definitely, some of them I suspect, but that's fine, I believe. Some of them may be very specific that can be answered by someone actually at this meeting without having to go to the budget panel, because ideally we should be picking up the bigger item, the tactical, the structural points, rather than just clarifying some of the things. But is that okay, Amir? Are you happy to proceed in that way?
I think it's an excellent way to move forward.
So the other thing which was very helpful before, our Brazilian cleaners just arrived in the office, now we need a deadline for getting it in so that it can be helpful. The other thing that we need, which would be desirable, Richard, I don't know whether you were told that previously people like Tom or Andrew, the previous officers doing your important role, they actually helped us by also, I think, suggesting questions that might have been prompted by the kind of discussions we have. Is that unfair to ask you if you also could suggest some of the questions, because that at least gets us on the right track?
Happily, that's already on my plan to.
Great.
I was going to simply subtly suggest key lines of inquiry and allow you to raise them as your questions, but yes.
Great.
And also Nigel and Anna are going to provide budget overviews for each service area, which you had last year. And that they're being produced and will be in time for budget review group work, but obviously aren't just yet.
So what would be, for us as panel members, what would be a good hard deadline for us to get questions, big ones, minor ones, via you, Richard, to get them
Well, I think it partly depends how long Nigel needs for them to be answered, because ideally we would publish privately the questions and answers before the budget review group starts.
Oh, absolutely, yeah.
Which obviously, with the bank holidays around Christmas, means it's pretty soon that it needs to be published. So it depends what sort of turnaround finance needs, really.
Can I in a little? Just because I was talking to my team today, so we're trying to set aside a time the week of the 19th to respond to questions. But it's also heads of service and directors, isn't it, Nigel?
Yeah, I think the problem is that it's not only finance basically. I mean, a lot of the questions that we get. I mean, I say a number of the questions that we get, we can't answer. You know, if it's like, well, you know, yeah, if there's specifics in the service. So it's the difficulty is basically trying to get it all coordinated. So, you know, we can try and work with whatever you're going to set basically, but I'd need to put heads of service and directors on notice basically that they're going to turn it around very quickly actually. Mm-hmm. So I mean, in the past, Anna, we have achieved that. I can't remember the timelines off the top of my head basically, but we have achieved that. It's been but the sooner we get the questions, I think, Richard, would be the better basically, and then we can endeavour to get all that work done.
Chris is going to make a suggestion.
I was going to suggest Monday as our deadline, given that gives us the rest of the week. And I don't know about others, but I've got a fairly big list of questions. I think the suggestions we get from Richard and previous year's questions, I think that's doable if that would leave enough time for officers. If that leaves enough time for panel members to get them.
Richard, have you actually drafted already something that we can get? And could you send us last year's questions as a prompt?
Yeah, I'll happily send you last year's. I've started writing questions. I'm not in a position to send them out, but would hope to be tomorrow or Friday morning at the latest. And so if you were to get questions to me on the back of that by Tuesday, that would mean that they could then go to officers for that week and then to be answered in the week beginning the 19th. I think publication is due on the 23rd. So it would be best if it were on the 22nd, really, just so it's out of the way. So if we work for member questions to be to me by the 13th and then get them out to service areas.
Yeah, that would work from our side, I think, actually.
That's good. Yeah.
And could I ask fellow panel members, I think if you can, when you send them in, copy them to the rest of us so that we don't end up spending time duplicating, that's all.
Yeah. Are we talking close on Richard?
Sorry,
rather than the first thing. Are you suggesting close of play on the 13th for our questions?
I was
as in the end of the day.
I was thinking lunchtime, but can go with the end of the day.
At the end of the day will work a bit better for me.
I think that's also true. I'm just looking. I've got loads of things. I'll actually have to try and get it on the 12th, but that's neither here nor there. Okay. No, that's fine. We can, if some of you, certainly the councillors, if you're coming to the Lord Mayor's Christmas reception on the Monday, we can even compare notes. I don't suggest we do, but we could try. So let's make it by the end of the day on the Tuesday. Yeah, that's good. Good discipline. And maybe I shouldn't say it on this, but I will. I mean, I do find it very disappointing. I don't think we've had Tom Landell-Mills. I can't remember when he turned up to this panel. I mean, we're not a big panel. It's a pity if one member consistently doesn't turn up, but still. Maybe I'll raise it with his leader, his group leader. Okay, look, thanks ever so much. And thank you, all four officers, for joining us. Amir.
Chair, I just wonder if we could clarify the dates for the budget review group meetings,
yes.
Because I have some clashes and it would be good to try and get them in the diary, please.
So the dates were circulated in September, which are the 4th, 5th and 10th of January. And you were away on the 10th. So that one will be hybrid. On the 4th and the 5th, the town hall is unavailable. So that's on Zoom. And then there's the 4th meeting for you to get together to go over the report, which I've asked you to hold Thursday, the 19th of January, which worked for Councillor Fry and Councillor Jarvis.
What time on the 19th, Richard, please?
I'd imagine 6, but I'm in your hands.
That could work. I can't make the 5th at all, I'm afraid. We're traveling away from the UK, and I will be mid-trans on the 5th, so I won't be able to make the 5th at all.
Which one is on the 5th? Can you please remind us?
That's the communities one? No, Development Directorate. So
Tom Bridgman's.
just opening the.
I mean, what I would say, Amir, is if it's okay by you, we could, I hope, well, there's not much time because it's a new year and all the rest, but maybe you could convey to certainly Chris and myself, I mean, by all means, Richard, just the kind of key things that you wanted to raise, and then we can act as your interlocutors or something, we will convey it to them.
So that's the one, Tom Bridgman's, so Development, Planning Services, Regeneration and Economy, and Corporate Property, to include the report on council assets. So yes, if you have any, then certainly ensure they're heard.
Will do, thank you.
It's a big one, so yeah. Okay, those dates are okay by you, Chris?
I was out of the room grabbing my diary at the start, but as I understand, it's the 4th, 5th, 10th, and 19th. Is that correct?
Yeah.
Yeah, they're all good.
So I've put them.
And the first two are on Zoom. The 10th, is that also on Zoom, or is that?
That's hybrid.
Hybrid, okay. And the 19th?
The 19th is for you to decide and for me to learn whether that's one that Nigel and Anna have traditionally attended as well, or is that just the panel? When they go over their report, you'll remember, Councillor Fry, more than I.
I would say that it's very useful to have the officers present here at that meeting as well, so we don't goof off. Not that we ever do.
I shall forward them that meeting now then.
Thanks very much.
Are we going to make a decision on whether that's in person or online? I'm back by then, so I'm easy either way.
I mean, my preference always is just because in a way you can get a sort of, I just feel the atmosphere is a bit better if you do it live, but this has been a very useful, constructive session, so I don't think it's a big deterrent. If you have a lot of people, then it gets messy, but I mean, this is perfectly fine if that's what people want. And I know some officers here, especially Nigel, live far away. So I'm perfectly happy to make it accommodated for what people want.
Should we stick with online for now then, unless
Yes,
we start missing each other?
Online or hybrid or whatever, yeah.
Great.
Okay. Right, look, thank you all very much indeed. And I can go and do I shout Donny very loudly when I get into the new theatre to discover your family?
Could well do.
I may even end up sitting next to them. I'll be very well behaved, I think. I had intended to be a bit riotous, but I won't. Anyhow, thank you all very much. Okay. I hope I may see the officers. I don't know if you get invited to the Christmas bash. Anyhow, the councillors are invited, and I don't know if I'll see you all before the end of the year. If not, well, thanks ever so much. You've been doing sterling work in adverse circumstances, so well done.
Thank you.
Thanks a lot.
All right. Thanks, Sam.
Okay.
Enjoy your relative shows.
Yes.
Yeah.
Okay.